The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Hello, it's Friday. Welcome to Squawk Box Europe. I'm Ben Boulos with Ian King, and these are your headlines. The Kospi rollercoaster continues. Korea's main stock index surging as much as 17% in Friday's session, now up more than 18% as SK Hynix and Samsung increased their valuations by more than a quarter. The Nasdaq breaks a 6-day losing streak as Microsoft adds the most to its market cap in a single day of any company ever, while tech earners diverge in after-hours trade. Apple on course to cede the valuation crown back to Nvidia, while Amazon surges nearly 10%.
Uncertainty is the word as the Bank of England delivers its fifth hold in a row, the Monetary Policy Committee voting 6-3 to keep rates unchanged. Governor Andrew Bailey tells CNBC his thinking behind the decision.
I'm quite resistant to the term hawkish hold. It's a hold. And I think we've got a lot of uncertainty and we've got to judge these effects as they come through.
Italian defence giant Leonardo upgrades its profit and order forecast for the year as new contracts surge by 45% in the first half. We'll hear from the CEO at 10:30 London time.
Well, what a week it has been for the markets, and it's a rather striking move on the Korean market today in the Asian trading session. Look at that, a jump of more than 18%, recovering a significant chunk, recovering a lot of the losses that we saw earlier in the week. It has been on a real roller coaster ride. There's been sharp moves in the big heavyweights on the Korean index, Samsung and SK Hynix. They have both rallied sharply today, helping to lift the broader index. There have also been some moves announced by the authorities in Korea to try and limit some of the volatility. We've seen some restrictions around single stock leveraged ETFs. We'll come on to that maybe a little later in the programme. But these are the moves that I was mentioning among the big chipmaker names. SK Hynix advancing almost 30% in a single session. Similar move for Samsung. We have seen that real sensitivity, that real volatility in the AI trade and the semiconductor trade, and they had seen sharp losses, but a lot of that now being recovered there. You can see they are sharply up on the day. And it was really a pick up in Wall Street overnight that has powered the sentiment, and that rally has filtered through to the Asian markets. Look at that. The Nasdaq leading the way, breaking its losing streak of several days and up by more than 2 3/4%. The Dow Jones also advancing, having dropped 1,000 points plus in the previous day, recovering a lot of that. And the S&P 500 also finishing the Thursday session in the green. Microsoft's shares jumped around 15.5% yesterday after it posted earnings after the bell on Wednesday. The move added, get this, just under $450 billion to the company's market cap. That is the most for any stock in a single day ever. Let that sink in. Tech earnings continued stateside. Amazon able to tell investors what they wanted to hear, sending the stock nearly 10% higher in extended trade. AI fueling growth at Amazon Web Services, with sales coming in 37% higher on the year, comfortably beating estimates. Meanwhile, investors took a bite out of Apple's shares in extended trade after the company warned that supply constraints will worsen this quarter and affect the iPhone, Mac and iPad. This comes despite posting a fourth consecutive quarter with revenue above $100 billion, as iPhone sales themselves jumped more than 20%. So that was the picture in the US and in the current trading session in Asia. Let's cast an eye ahead, and a lot of that positive sentiment filtering through into the session. It's being anticipated that all of the key benchmarks will open in the green. We are just under an hour away from the European trading day getting underway. We'll, of course, count down to that and bring the open at 8 o'clock, as usual, here on Squawk.
No, NatWest results have just dropped for the first half of the year, and very, very strong numbers they are too. I'll tell you, there's a comment, I'm reading the comments here from Paul Thwaite, the Chief Executive. He said, NatWest Group's strong performance in the first half of the year shows our strategy is consistently delivering for customers and shareholders. Return on tangible equity of 19.7%. I can tell you that is a significant improvement. In the first quarter of the year, the return on tangible equity was 18.2. So by my crude arithmetic, that means it's around about 21 for the second quarter of the year, so 19.7 for the first half. Profits 4.3 billion for the first half of the year. That's up from 3.6 billion in the same period last year. That's operating profit. Attributable profits 3 billion versus 2.5 billion same period last year. Income 8.7 billion pounds versus 8 billion pounds, and costs 4.1 billion, up from 3.9 billion at the first half stage last year. Cost income ratio, crucially of course, down from 48.8 in the first half of last year to 46% this time around. Well, Katie Murray is the Chief Financial Officer at NatWest, and Ritika's also going to join the conversation as well. Katie, very good morning to you. Thanks very much for joining us. I mean, on my crude assessment, this looks like a blowout second quarter for you.
Yeah, no, thank you very much. Good morning. Lovely to be here. Look, they're great results. You know, income 8.7 billion, up 8.9%. Our cost income ratio, a real measure of our sector leading efficiency, at 46%. Return on tangible equity, as you've already said, 19.7%. That then kind of comes together for us to declare a dividend, which is up 26.3% on the prior year at 12 pence. And what's really important is growth is driven from all lines of business across the bank, with our CAL measure, which is our lending, deposits and assets under management, up 5.2%. So absolutely, couldn't agree more, a fantastic set of results.
Katie, what's happened on the impairments front?
So if you look at impairments for the half, they're at 19 basis points. But interestingly, in the second quarter, they were only at 13 basis points. So very kind of low continuing numbers there, which really just shows the strength of the book, the low risk nature of it, and how well the underlying is actually performing within there. So again, that's also a very solid print.
Katie, Ritika jumping in here. Talk to me about what you're seeing in the mortgage business, because we've seen borrowing costs have risen, the 30-year yield around 5.7%. So how is that impacting the mortgage business, and how strong do you think demand there is in that business will be going forward? And also, what assumptions are built into your guidance about the forward path of interest rates? Of course, we had the Bank of England decision yesterday. It was a whole, but there's a lot of uncertainty around the future path.
So if we look at that last question first, in terms of our interest rates going forward from here, we're assuming that they're being held flat, 3.75 for quite some time from here. So we've not made any changes to them in that space. But if I look at mortgages, we had a very strong growth in mortgages this quarter, 10.7 billion of gross new lending. That is was supported by the fact, you may recall, that we had very strong applications at the tail end of Q1, and they generally come through the next quarter. We still see the mortgage market as quite competitive. That can be good for consumers, because that means there's more kind of pricing opportunities for there. And we also importantly seeing our customers really being very mindful of how they manage their mortgages. Traditionally, we would normally sell more 5-year, but at the moment we're selling more 2-year mortgages, as people are taking a view on to say, actually, I'll lock into what may be a slightly higher rate now, in the anticipation that in a couple of years' time that will have solved itself down. So you do see people being very mindful about how they manage that. And while it continues to be a competitive market, it's still a strong one as we look through to the second half of the year.
Katie, I just wonder to what extent the mortgage picture and activity for you is being flattered by the fact that you've got all these sort of COVID-era 5-year deals that are sort of rolling off right now. Presumably the pricing of this is beneficial to you.
So as we look at it, what you can see is actually we've got some higher margin product rolling off, because you're absolutely right, it's that 5-year kind of anniversary. And what we're doing is we're pulling on mortgages which are actually slightly lower margin. So you can see the total value of our book of mortgages is coming down a little bit at the moment. I've talked over the last couple of quarters that book will kind of revert to about kind of 60 basis points. So it's taking a little bit of pressure within there. But what's really exciting for us is the real strength of that mortgage business. And what the team have done there brilliantly over the last sort of year or so is to really expand the proposition, whether that's through things like family-backed mortgages or the work that we're doing in terms of the buy-to-let, or just making sure that we're serving more of the waterfront so that you can get different kind of margin opportunities in different places.
And Katie, of course, we've got a new Prime Minister, we have a new Chancellor. What are you watching in terms of the autumn budget, and how are your corporate clients reacting to this? Are you seeing more uncertainty? Are they delaying investment decisions? And for the bank, are you concerned about any potential further tax hikes for the sector?
So as we look at the new government, we've been pleased that they've reached out. They're obviously looking to listen to business as well. We like the kind of 5 priorities that the Chancellor has put out. They're very much aligned to what we're trying to do around regional growth and the kind of creation of wealth across the economy. When I look at our businesses, it's interesting. I spoke earlier about that CAL number. That's grown by 5.2%. Within there, it's business lending has grown by 4.3%. That's very strong. So what you can see is underneath, businesses are making decisions, they're moving on, they're trying to kind of work with what we have. I think what businesses need and what we all need is very much around policy stability. The government recognises that financial services play a really key role in the growth of the UK economy, and that strong economies need strong banks. So the real ask there is about policy stability, so that we and our customers are able to move forward, knowing the guardrails within which you're working.
Katie, it's Ben here. Impossible these days to do an interview without raising the topic of AI, and it reaches into all businesses in all corners of industry. And I just wonder where NatWest is at the moment in terms of balancing up the potential benefits you see to your operations from it compared with the potential risks and how you're navigating that.
It's something we spend a lot of time kind of debating to make sure that you have got the right kind of balance of both. When we look at it, we see it as something that's really strong in terms of helping us kind of deliver, whether that's from the level of coding that we do, speeding up of getting propositions out to market, or even some interesting things like where you have older systems to be able to actually use AI to help you do coding that in reality it's hard to get kind of coders for. All of our staff have got access to some great AI tools. I can see the kind of personal productivity that creates for them in being able to do some more routine tasks much more quickly. But you're absolutely right. You've got to be mindful that you're then using the data in the right way, that it's kept in a very secure environment. And we spend a lot of time debating that. But I think it is a huge opportunity. And it's great as we all continue to learn and develop the different things that we can see it delivering for us in the bank. And it'll be a real addition into how we continue to develop our technology story as we move on from here.
Just last month, the boss had said that absolutely AI will take over some banking jobs. Are you doing some sort of calculations in the margins, jotting down some numbers about what potential workforce reduction you might see at NatWest due to AI?
I completely agree with Paul. He's absolutely right that we will see changes. We're seeing them already in that we're recruiting some jobs that we didn't before, other jobs are changing. And certainly all of our staff are kind of going through some retraining to kind of understand how we go on that. What's interesting is we've actually recruited more graduates this year because of AI, bringing in really the right kind of skills as we go through from there. So we are kind of working at what it might mean in the medium and longer term, but it is, I think, something that's also creating great opportunity for people as well.
Katie, obviously during the quarter you've completed the acquisition of Evelyn Partners. A lot of scepticism in the market about that transaction. What can you tell us about how it's gone so far?
Really pleased by the acquisition. We think it absolutely makes sense. It really aligns to what we're trying to do nationally in terms of kind of growing the wealth of the UK. We're 1 month in, post completion of the transaction. The integration is going well. The new management team is set up. We're seeing referrals from Evelyn into our customer base and also from the customer base into Evelyn. Best Invest, their direct investment channel, is now being made available to a small number, but will grow, of NatWest customers. We're seeing some nice uptake within there. We think it's a very exciting acquisition. It's a fast growing area of the UK economy. And for us, it really provides us to become UK's leading private bank in wealth management, but for our customers, providing a service from the very beginning of your early savings all the way up to the kind of decumulation stage. So really making sure we can be very holistic in that delivery.
Katie, look, these are absolutely blowout numbers. I mean, the return on tangible equity really took the breath away. But also, I gather you're bringing forward guidance on when you're going to resume buybacks again. There's a lot of pressure on the new Prime Minister right now to find taxes from somewhere. If I was the Chancellor looking at these sort of numbers, I'd be thinking, I've got the TUC on my back demanding that I increase the banking levy. Numbers as strong as this is going to provide a bit of temptation for them on that front, isn't it?
I think I'll probably leave number 11 to look at it in terms of what they might look at. But I think the thing that I come back to is we know that the Chancellor and the government, they recognise that you really need to have very strong banks to support the kind of strength and the growth we want to see in the UK economy, and that growth in making sure that we have as much capital available as possible to lend into the economy is something I think that we're all very aligned on in terms of our views.
Katie, we've got to leave it there. Great to see you this morning. Thanks very much indeed.
Lovely. Thanks very much indeed. Have a great day.
That's Katie Murray, Chief Financial Officer of NatWest. Extraordinary numbers, really, those, raising the dividend by 26%. Anyway, the Bank of England held interest rates steady, but with a higher level of dissent than markets anticipated. Monetary Policy Committee members Catherine Mann, Megan Green and Hugh Pill all voted for a quarter-point hike amid heightened volatility in energy prices. Well, Ritika joins us with more. Ritika, you spoke to Andrew Bailey last night, of course.
Yes, I did. And of course, they left interest rates steady at 3.75%, despite the renewed tensions in the Middle East, despite this volatility that we've seen in oil prices. A lot of that enabled by the data that we've seen in the UK, the CPI undershooting targets. We've seen slower wage growth, and it gives them flexibility, some time to assess both the Middle East situation as well as the domestic UK political picture as well, and Andy Burnham's policies as new Prime Minister. So the split may have been more hawkish than the markets were expecting, with a 6-3 vote, with those three dissenters opting for a rate hike. But the overall tone was still more dovish. Governor Andrew Bailey reiterated in my interview with him that it was a hold, not a hawkish hold, and they're still not seeing signs that persistent inflation or that the energy shock is translating into persistent inflation. And they've said that the higher borrowing costs, they've also helped to keep a lid on inflation. So I spoke to Andrew Bailey. This is what he had to say around second order effects and his decision making and what it means for the path ahead.
Well, the thing is that, unfortunately, given the volatility of the situation we're in, there's a lot more uncertainty around even what we have reintroduced the central projection, or baseline projection, call it what you like. But honestly, it does not have the same probability attached to it as we would normally do, and that's important for sort of, in a sense, answering a question, sort of conditioning of that position, because I think the best thing to say is, look, there are ways in which this can unfold, which would undoubtedly, I think, cause us to have to raise rates. But there are also ways in which it can unfold which will not cause us to have to raise rates, and that's the uncertainty around the pass-through of this effect, how big the effects are going to be and how they pass through.
And would you hike rates as a sort of insurance hike against those second round effects, even if you haven't seen them yet?
Well, I think the thing with second round effects is you can't wait for the sort of the final reckoning, as it were, because it's too late. Because they come through over the whole, what we tend to call transmission period of monetary policy. So we always talk about monetary policy taking its effect over, year 2-3 years. If you wait that long to get your final tally, as it were, you've waited too long. So there will come a point when we have to make that call at every meeting, but I think there'll come a point where that call will become, frankly, very prominent. And we don't at this stage know what that call will be because of the uncertainty.
Now, when it comes to the guidance, they left that pretty much unchanged. They say the Bank of England stands ready to act as necessary to get inflation down to its 2% target. So again, it gives policymakers some flexibility as they assess situations in the Middle East. And here on the home front with Andy Burnham, that means that September is still very much a live decision if we get this energy market volatility persisting. And we've seen markets have been pricing in nearly 2 rate hikes this year.
Okay. Have we got time for another, or are we moving on? We'll move on. Richard, we'll pick up the conversation with you a little later. Thanks for joining us and thanks for sharing that interview with Andrew Bailey. In the meantime, let's move on because Euronext delivers its 9th consecutive quarter of double-digit growth. We'll hear from the CEO, Stefan Bujner, after the break.
I'm Steve Sedgwick from CNBC, and in my new podcast, Executive Decisions, I ask powerful leaders about their decisions that changed everything.
I'm not frightened of making tough decisions, and I think leadership can be very lonely.
Business leaders should not stay quiet in a world which is super complex.
It is absolutely fine to also change your mind.
Tough calls, personal crossroads. These are the stories that we can all learn from. It's Executive Decisions from CNBC. Get it wherever you get your podcasts.
Welcome back. Euronext posted underlying revenue growth of just under 17% in the second quarter, coming in at 544 million euros. The exchange group pointed to strong growth in its capital markets and data solutions, driven in part by its acquisition of the Athens exchange. Stefan Bujner is the CEO and chairman of Euronext. I'm delighted to say joins us live on the programme now. Stefan, very good to have you with us. Just tell us a little bit more about these latest figures and how much of it is down to the flurry of trading that we've seen in capital markets over the last quarter.
Well, what is interesting is that this is the 9th consecutive quarter for more than 2 years then, with double-digit growth in top line, double-digit growth in EBITDA, double-digit growth in EPS. So there is a fundamental underlying bedrock of growth within the Euronext machine that is there above and beyond the conjunctural boom on equity markets volatility. And the other thing which is quite interesting is that even if our volume-driven revenues grew by 19%, double-digit for sure, our non-volume-driven revenues grew also by 15%. So there is a momentum across asset class above and beyond the current volatility on volumes. And on volumes, we are doing extremely well in equity markets for obvious reasons that any market participant can appreciate, but also in asset classes like sovereign debt, with the boom on MTS business, on commodities, but also, as I said, on non-volume related businesses like market data. So there is a fundamental growth engine within the Euronext machine that started more than 2 years ago, almost 3 years ago, and that is delivering quarter after quarter.
Just tell us a little bit more about the acquisition of the Athens exchange and how that's progressing.
It's progressing extremely well. As you know, over the past few years, there was always a skepticism about the Greek economy, the Greek momentum. But the reality is that what used to be referred to as pigs, Portugal, Italy, Ireland, Greece, and Spain, are doing an amazing job and an amazing recovery. On macro terms, Greece is delivering the third year of budget surplus. Greece is paying back more debt than they borrow on markets, and there is definitely a rally on Greek assets, on Greek stocks. So the acquisition of the Athens Stock Exchange last year was very timely. We are capturing this momentum, and we are combining forces with the Athens team to do some real breakthrough. For example, we have a strong momentum of repatriation of Greek ship owners, companies, to have them listed in Europe. So we are getting back to a situation where not only volumes in Greece are much higher than when we bought the company 1 year ago, at the end of last year, sorry. But on the other hand, across products and businesses of our Greek business, we are very enthusiastic because we get a great movement. And something which I should underline, we are creating in Athens a group level technology and support function center. So we are going to create significant number of jobs in Athens to work for the group. because we are just impressed by the quality of the talents that we find in Athens, in Greece in general, in Thessaloniki as well. And we are very enthusiastic about the success of this transaction. We are confident that the integration will go much faster than what we had anticipated initially.
Stefan, the London Stock Exchange has just announced it's going to go to 24-hour trading 5 days a week. Is that something you may have to follow suit in? What do market participants tell you about this?
Well, it's a very complex issue. We are obviously doing a lot as the London Stock Exchange, which is doing this very bold and very ambitious move. And LSE is a great company which is doing very innovative moves from time to time, and this one is one of them. And we concur with the approach that retail investors want to trade in a more convenient way across the clock. We concur with the analysis that some global investors want to have direct access to market across the clock. That makes plenty of sense. On the other hand, you have the usual issues like how do you manage netting and clearing? How do you manage market-sensitive information release and corporate actions management? So, and what is more fundamental, because on those two aspects there are solutions. How do you manage the dilution of liquidity? I mean, because on the one hand, you have a pressure for 24/7. On the other hand, you have the reality, which is concentration of trading on closing auction. So it's not as simplistic as it looks like. What I can tell you is that we are monitoring those things, and we are taking some steps, and we are developing, in particular, in new asset classes like tokenized digital assets, a native 24/7 approach, for sure. On the core legacy traditional matching engine systems, it will be more incremental for the moment. There are asset classes where these increments have been amazingly successful. For example, we've extended for 2 hours the trading of a derivative in agricultural commodities, and that has a real impact without any cannibalization of generating new volume. So we are following this trend. We are a bit more cautious because we want to make sure that we can make money with a 24/7 solution, and not only just announcing a breakthrough. And we want to make sure that all the investors are happy with it, not only retail investors, but also institutional investors who seek concentration of liquidity.
Very interesting to pick up on the comments you made there about newer products, tokenized products. I mean, obviously, younger retail investors are piling into assets like crypto in particular. Can you ever persuade them to invest in more traditional, as you call them, legacy assets on regulated markets?
Well, people do whatever they want. So, but fundamentally, at some point of time, they realize that there is something in life, which is called dividends or coupons. And if you want to get some yield and not only some capital gains, then the crypto assets have limited advantages. I mean, crypto is great for speculation and for capital gains extraction at best. But if you need to generate a yield, that's not the right place to be. So what we are observing is definitely a growth of retail participations. What we are observing is definitely, as you are rightly pointing out, the new generation of investors. These are not retired or pre-retired people. They are young investors who move from crypto to more traditional assets. What we are observing is that there is a strong appetite to move to tokenized assets. What you call digital assets should be called decentralized digital assets. And I believe that over time, not only the format of the assets will transition in an increasing number of asset classes from files to tokens, that's for sure, but also the full workflows of processing in markets those tokens, those decentralized digital assets will be transformed, and we are actively working on it. We are not releasing any expectations in terms of timetable or in terms of revenues or in terms of cost deployment, but we are very active in that direction, working with partners.
OK, Stefan, we must leave it there, but thanks for joining us, Stefan Bujna, CEO and Chairman of Euronext, joining us from Porto. Of course, we get your updates from a different location of the group every time. We wait with bated breath to see where you'll be speaking to us from next time. In the meantime, let me just bring you some really significant breaking news here. BP says it is launching a process to market its North Sea business for a potential sale. This crossing the wires just in the last few minutes. The UK Energy Minister has been reacting in the last few moments as well, saying that she is in close contact with BP and have made clear that my priority is ensuring that the workers and local community are protected during this sale process. Miata Fampoula also went on to say the North Sea is a vital national asset and we will take a pragmatic approach. And the final comment that we have from the UK Energy Minister: oil and gas will be part of our energy mix for years to come. So those comments from the UK Energy Minister reacting to that announcement that BP says it is launching a process to put its North Sea business up for a potential sale.